Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are, and I'm later today. I just did my show with Barry Rosen of FortuneCast, and yes, it is Thursday, the 25th of August, 2011, getting on to 4:25 in the afternoon. And today was a miserable day for me. I looked at the market, was right and wrong all at the same time, and that's always terrible. Yesterday I went on to a bunch of shows, and people were asking me a longer-term view, what did I think gold was doing? And I said, I thought that between the 1750 level and 1600 is where we will end up seeing an important low in the gold. Today the market got down to 1705.40, and in the process it did something I didn't like. So let's talk about what it did. This is a chart of December gold, and as you can see, it's dropped large in but 3 trading sessions. It's really gone from about 1917 to 1705. And you had a bounce today. One day doesn't prove that the market's done anything, but it's where it bounced from that bothered me. And when you put on the swing line, you get to see the market up here at 1917, and today you just snuck out under 1725.80, which is shucks. I wish it hadn't done that. And the reason is now the pattern on the chart is one of a higher high and unfortunately a lower low. So you've got a widening out like this, just like that. Resistance or support, which one do you want to call it? I'm calling it support, is the 18-day average of closes. That is the number I thought last night the market would try to hold, get close to, but not take out 1725.80. By taking that out, you're in this funny mishmash now. I wouldn't be surprised if you try the high side and come back down tomorrow, but you're going to need to do a little bit of basing in this market. Remember what we also talked about that I've been mentioning here are the cycles. The cycles say that come the end of August right on through October, the market has a tendency to rally. That doesn't mean every day it goes up, but that's the tendency. I was hoping this break would generate more than it did if it was going to break or completely fall short and not get through 1725.80. The second choice is what I went with, and it proved to be not the right choice. That doesn't mean I'm wrong for the long picture. I think you're going up much higher than the high on this chart. I go on record as stating I'm not buying into the idea that we have a gold bubble. I want to go on record stating that I'm wrong on that theory. If the budget deficit gets fixed, if we don't have another stimulus plan that comes around, if we can get Europe back to the table and resolve their problem. All right, today, understand what went on here. Finland isn't going into the deal, or they said they're not, to bail out Greece. Greece has got the issues where now all the people aren't coming together, and Chancellor Merkel canceled her trip to Russia because she's got to take her parliament and get everybody lined up. This is anything but a news event that was out there today, but it was super important. And I just question how much of the rally at the end of the day was that, and the combination of what is Chairman Bernanke going to or not going to say at the Jackson Hole speech tomorrow. I'm on record there that I don't think he's going to upstage the president, but I don't know. I don't speak to him. So the market's going to tell us. Right now, just looking at a trend and forget it's gold. You got a higher high and a lower low, and you're over the 18-day average. That's about as neutral as I know how to call a chart. I am looking for these Bollinger Bands to wrap in very quickly, which means I personally look for the market to trade back and forth sideways over the next few days and then possibly break out again, maybe after the president's speech. Hard to know. But I'm looking for that whipsaw event. If you look, you're trying to correct an overbought condition, and you've done it by the close of business today. And this will be where the stochastics end up. The market finished up on the day at 1763.20, but the real trade at the end of the day was about a 1775 print, about $12 higher than this. For those of you that aren't initiated to what this is all about, the exchanges officially closed gold at 1:30 Eastern Time. but the trade goes until about 4 o'clock Chicago time, and then they put up an official close based on that other time. So the market, when it reopens in the evening, will look at where the last print is and often trade there. So I can already make a bet with my friends. I think you'll be up $10. The odds of me being wrong? Well, the odds are all in my favor. There's no magic to it. I wish they would close the market at the 4 o'clock time. But in any case, stochastics mixed, coming down, the swing line mixed, and you're holding the 18-day average of closes, which is my line in the sand, so I think the bull market is still good and in real good shape. Here's the stronger market, silver. Silver got over that Bollinger Band, slammed down, has now had 2 days of fighting against the 18-day average, did not take out 38.25, the last break low, and now the slow stochastics are starting to bend sideways. So unless this market has another big down, I'm thinking that a low is getting itself in place in silver, and that the market is starting to give you a better story here than it actually is in the gold temporarily. Maybe that fits in with the stimulus plan, the demand for metals such as copper. Take a look at what copper did today. This is all good action. Here's a market that got too cheap on the big washout with stocks and everything at the beginning of August, found a home in, let's call it the 381 zone if you want to, something in that area. I really call it the 390, 395 area. Then it went from 395 to the $4 level, and now the market's sticking its head back up towards 410. But you're going to have to get under all this to get the crowd excited that there's anything bearish, and after this bigger break, this is what I call consolidation. And if I'm right, and this is what I suspect is going to happen, I think the commodity boom is nowhere near over. If I'm wrong, that means a double dip recession is going to take place in America, probably Europe to a degree, and China won't do a lot of buying. If I'm right, this is the area where the market pulled back to, and this is your new price plateau. And from there, the market's going to eventually advance because of all the stimulus thrown to avoid these world recessions from occurring. It's my theory on it. We'll see if this thing's right or wrong. This is the crude oil. And in the crude oil, you're very close to a breakout to the upside. If you can take out 86.59, I think the trade will look at it that as long as you don't get back under today's lows, you might be ready to pop up to the 90 level. Where's the battle happening? Look at the line in the sand that I draw for you, this 18-day moving average of closes. Look how the market rallied to it, failed, went down. First time it went up to it yesterday, dropped down sharp today, comes back up, contained. That to me is the resistance point, and the swing line will turn up. You'll have, if you take out today's high, higher highs, a higher break low than the 79.30, and I think the trend is ready to move to the upside. The gold-silver ratio, again, when the market was breaking out in favor of the gold, I think I was here nicely saying, guys, I don't think it's going to stay over 45. I think it's going to pull back and trade in these 40, let's call it 40, 45 area, but not break out and stay above it. Well, so far, I've been on the money with that. I don't know how you make money on it, but it's something you notice. And take a look at the whole break in the notes. I want to pull this chart back. When we started correcting and the stochastics lost its embedded status here, that's when your numbers got under 78. They lost the 80 level. Both the red and the brown had been over 80. I said, you know, I think you're going to come together with price and wherever that 18-day average ends up. Because the 18-day moving average of closes uses the current price in the last 17 closes, the slope of that average goes up. And if you watch any of the TV shows on finance, you'll hear them talk the 200-day moving average in stocks, the 100-day, and so on. I think the 18-day average is the most important in the daily futures charts. And I also think that it's another word for the line in the sand. So I've been waiting to see if this market can pull back. So this was the action on Tuesday. Here is the action yesterday, and look at how that market's dancing. The word is dancing. It hit 129.09 and a half, 129.12 is that 18-day average. So this is where the market has to make up its mind what it's going to do. And guess what tomorrow is? Jackson Hole. Guess what next week is? Or I guess about a week and a half. The president's speech. This market's neutralizing this whole move and trying to figure out now what's going to happen. In other words, the big money, I think, has gotten itself very neutral here. Reebok gasoline broke out to the upside. Didn't do it today. Here's when it did it. Look at 277.17. Came down, stayed under the Bollinger Band. This is what I call, if you will, the oversold condition, where the Johnny-come-latelys that are just selling into it, selling under a Bollinger Band, to me is never a good idea. Strong word, never. But go back to all my videos. You'll hear me say don't buy over it, don't sell under it. It's because of how the algorithm is set up. And I've been looking for the resistance to come up to the 18-day average. Now, 277.17 was the last rally high. You had not hit it on Tuesday. Yesterday, you got through it. As far as I'm concerned now, until you get under 260.216, the trend is up. But it is overbought. You see that clear as can be here. Support should be on pullbacks towards the 18-day average. You haven't pulled back yet. You're still just climbing away. That's how it goes. Trend is not down in this market at this point. But again, we're going to have to see how Jackson Hole goes. So today the offering, you've seen the number on the bottom of the screen. It's scrolling. Take advantage of it. Our futures trading kit, our market information, it's all there for you. Hope to hear from you, and I'm IRAP.